Hello, everyone. This is Jan Skoropinski with you today, and I'm excited to be welcoming you officially to Online Trading Campus and to the first module of our new Campus Blueprint course. Before we jump into the first module, let us first spend some time on this slide right here. This Blueprint strategy course is designed to be an all-encompassing strategy course. What I mean by that is that we will not just cover supply and demand, but the strategy course entails three major pillars or sub-strategies, if you will, that put together in the right place will form the entirety of the Blueprint course and the Blueprint strategy. Of course, we will start this course off by covering supply and demand, and supply and demand will form the foundation of the overall Blueprint strategy. Supply and demand is the foundation of the Blueprint strategy because it's universal. It's universal to all assets and markets. Whether you're a preferred gold trader or crude oil trader, or whether your favorite markets are Forex or crypto, supply and demand is universally applicable to all markets. Supply and demand is also universal to all income goals, whether you want to focus on short-term income, medium-term income, or long-term wealth. Supply and demand is, again, universally applicable to all income goals. And with the help of supply and demand, you will acquire the skill of timing the markets. Being able to accurately get in and out of the markets with high probability, low risk, and high reward trade setups. But, and here's the catch, just because you're able to time the markets doesn't necessarily mean that you're able to predict the markets. There's a difference. Now, let me explain this. Supply and demand is an analysis based on price. And if you want to be able to predict price, you need to know what drives price. And if you were to answer the question of what drives price with the answer price, then that's kind of a circular reference and a fallacy. Price cannot drive price. In fact, it's fundamentals that drive price. And that's exactly where the next pillar or sub-strategy of the overall Blueprint strategy comes into play. At Online Trading Campus, we have developed proprietary and well-seasoned fundamental forecasting tools that have a very robust track record of predicting the future. And in this course, I will start introducing those fundamental indicators very, very early. Now, the minute I start to introduce those fundamentals, the problem is that the conversation that we're having all of a sudden becomes much more complex, because contrary to supply and demand, which is universal to all markets, fundamentals depend on the markets we trade. And not all markets underlie the same fundamental conditions. And therefore, different markets have different fundamental drivers. Now it's our job to figure out which fundamentals really matter and which fundamentals don't really matter. And this may take a long time, but here's the good news. Once you understand the fundamental drivers of the markets you trade, then you understand what moves price. And if you know what moves price, then you can predict major rallies and declines before they happen. Now, once you can predict major rallies or declines before they happen, you can look to position yourself early before the market completely takes off. And this is where, again, circling back to supply and demand, where supply and demand will come back into play, as you will then use the power of supply and demand to time the markets consistently and accurately. Now, if you are new to the campus and this is all a lot of information at once, no worries. And no worries if you're not following this. We will cover all of these pillars in a lot of detail throughout this entire course. To me, it is important though, in the beginning already, to give you a general concept of the blueprint strategy and how we can combine different, let's call them sub-strategies, mainly technicals and fundamentals, into one overall blueprint strategy. Now, the last pillar is a very interesting pillar. The last pillar of our blueprint strategy is what we call Campos Strategy Optimization. Campos Strategy Optimization is an innovative software that we developed and launched late last year and, well, actually early this year. Let me explain this in a little more detail before we move on. If you think about, let's say, the last 10 or 20 years, then you can probably agree with me that technology and innovation, computers and phones, and now also AI, by the way, have changed the way we act, they change the way we think, and they change the way we make decisions every day. But in the financial world, there has been very little to, let's say, no progress whatsoever. That's odd, isn't it? Data and knowledge is so readily available at your fingertips. You can ask Siri, you can ask Google. And since this year, I think a little bit longer than this year, since maybe already 3 months, you can also ask ChatGPT to answer any of the questions you have. And you may have tried that already. I know I did. And so I actually tried asking ChatGPT the other day whether or not I should buy gold. And the answer that I got was very vague. It was about saving money, and it was about, it was telling me to seek advice and to seek financial advice and to seek out financial advisors. And it was telling me that it's a language model and that it cannot predict the markets. I could also ask Siri. So, hey Siri, should I buy gold today? And it's just telling me, sorry, I can't get the information about that commodity. Usually it tells me that it doesn't really get my question, but she's just quiet today. So also Siri can help me. And so you can see, and you can try that yourself, there's very little to no innovation in the field of the financial markets. Now, wouldn't it be nice though to have the computer look at thousands and hundreds of thousands of relevant financial data points, then filter those data points through sophisticated calculations, backtests, and logic, and based on those computerized calculations, then spit out potentially profitable trade opportunities. Now, that is exactly what the Campos Strategy Optimization software is supposed to do. It uses the powerful machines that we're sitting in front of, and it works kind of like an answering machine. And that's good because in trading, you may have a lot of questions, especially if you're new to trading. You may have a lot of questions like, When should I buy? At what price should I buy? What should be the stop loss that I should use? How many days should I be holding a specific trade? And what's the expected profitability of that trade idea? And all of these questions are questions that the strategy optimizer answers. Now, to drive this home with an analogy, for those of you that have seen Iron Man, that analogy will make sense. So Jarvis would be the equivalent of this software. In very easy terminology, it's an answering machine like Google or Siri, but it focuses on the financial markets. All right, so all of these pillars that you've just seen combined, put together at the right place of the analysis, will form a strong foundation for trading and investing. And in fact, it will form a strong foundation for trading and investing for any market you can think of. What you want to do is you want to use the large amount of data you have access to, and you want to use the powerful machines you're sitting in front of to the best of your capability. And that's my goal for this entire course. My goal in this course is to give you advanced tools and knowledge about the markets we trade, so you can make sound financial decisions and choices for your future. I want to give you access to powerful strategies and well-seasoned forecasting tools, as well as innovative trading software. All right, so with that out of the way, I want to welcome everyone to Module 1, Campus Strategy 101. Module 1 will build on a lot we just covered conceptually. We will cover it now in a lot of detail. Moving on to the agenda. First, we're going to talk about technicals versus fundamentals, followed by answering a question that I get a lot, which is, what is a good trader? And therefore also answering the question, what a good trade consists of. Then we'll categorize our markets into finite versus infinite markets. And that is because we trade many markets, and not all markets, as mentioned before, have the same underlying fundamental conditions. Here, what we need to do is we need to categorize the different assets we trade to ensure we are applying the right fundamental forecasting tools for the markets we trade. And so what I will do is I will give you a table later on that covers our strategy pillars and tells you what analysis we should focus on for each market. We will then wrap this module up by talking about the strategy process. Here, we will conceptually cover each step of the analysis you will look at and all the questions you will ask when analyzing any market. And at last, for those of you that are new to the Online Trading Campus, I want to talk to you about your trading journey with us. What is required in terms of your trading setup and what awaits you in the future. So it all boils down to the right analysis, doesn't it? Which one should we follow? And while this may be a simple question, the answer, unfortunately, is much more complex. In trading, there are two camps, and both camps claim that they have the superior strategy. There is the technical chart analyst and the fundamental analyst. Technical analysis is most widely used by traders today. supply and demand is a technical analysis because it is based on price and chart patterns or formations. Technical analysis could also be based on volume or moving averages. Now, these would be very outdated and bad examples, in my opinion, of analyzing price because they're more than 50 years old. Now, don't get me wrong, I'm not saying that they are completely wrong, and some of them may find their way also into our analysis at times, but today there are much better ways of analyzing price. And the most accurate way of defining and analyzing price is supply and demand. Here is what the technical chart analyst will claim. They will claim that the chart and price will tell you everything there is to know about trading. I disagree. In my opinion, technical analysis should be mostly used to find good entries and stops and targets. In other words, technical analysis should be used to time the markets, to become masters at timing the market. And supply and demand is the most powerful technical analysis we can use to time the markets most consistently and most accurately. Here's the issue with supply and demand. Supply and demand, however, does not really tell us what the best markets may be to focus on right now. What I mean by that is that there are more predictive tools out there than supply and demand. And I believe that these tools are found when actually looking at the fundamental conditions of the markets we trade. Fundamentals will help us in determining whether we can expect a substantial move or not. Now, fundamentals, there are many things we could look at. And I think most problematic with most fundamental strategies is that the numbers, let's say, on physical supply and demand inventories of commodities, for example, they can change quickly. And, you know, these numbers are subjective and it depends on the interpretation of the trader, and what you may think is bullish may be bearish to another person's point of view. And this is exactly the reason and the argument why most technicians avoid fundamentals. Therefore, what we need to achieve is to find fundamental ways of analyzing the markets that are not subjective, that are as objective as possible. And there are ways on how this can be done. And this is where the Campos indicators will come into play. The Campos COT index, Campos valuation, and Campos true seasonality are all well-seasoned forecasting tools that show a very accurate track record of predicting the future. All right, so the technical chart analysis is objective and it's universally applicable to all markets. Technicals are powerful for market timing. Fundamentals lack market timing, but they are much more predictive of when major market moves may take place in the future. Remember, fundamentals drive price. So why don't we combine the best of both worlds? A question that I get a lot is, what is a good trader? Good traders are good decision makers. They make decisions every day. Even if we decide not to trade, that's an active decision, isn't it? That, I'm sure you can agree, sometimes can be even more difficult than to trade. So good traders are good decision makers. They make future predictions based on a study of the past. They understand the fundamental drivers of the markets they trade, and above all, they're good money managers. So let me put this in other words. They know and understand what drives price, the fundamental condition. They have a way of timing the market with an adequate risk-to-reward proposition. That's where supply and demand comes into play. So it's supply and demand that will allow us to be good money managers through risk-to-reward propositions and good entries and good stops and good targets. And it's the fundamental forecasting tools that will allow us to predict the future. That brings us to this slide, which answers what a good trade needs to consist of. And every trade should consist of two elements: the underlying fundamental condition of the market, the so-called setup. We can determine a good setup by using our Campos indicators. But remember, when a market sets up fundamentally, it will not tell us at which price to buy or sell. And so after a market sets up, we then want to go ahead and time that market with a quality risk-to-reward proposition before it completely takes off. We then use our market timing tools to tell us at which price to buy or sell. And this is where we use supply and demand to accurately get in and out of the markets by placing quality entries, quality stops, and quality targets. To most people, trading is an unsolved puzzle. And there are many puzzle pieces, in fact, that we must put together in the right place to become good traders. And all of you may be at different phases of figuring out this puzzle. You may have just started with Online Trading Campus and you are learning, you're studying, or you're acquiring the knowledge of what strategies to use. You may have already studied the course material and you're already practicing and backtesting. Now, important here, you can only transfer the knowledge from the course material into a skill, right? Transferring knowledge into a skill that you can apply through practical applications and backtesting. So you will look at both the fundamental condition of the markets you trade, and you will analyze the markets based on technical analysis by using supply and demand. And once you've done that, you then need to take a decision of whether to take a certain trade or whether not to trade. And after a trade has played out, let's say you decided to take a certain trade, and after that trade has played out for better or for worse, your job is not yet done. Then you still want to log the trade you've taken and review your trade log. And that can only be done, let's say, after you've a good sample size of 10 or 20 trades. This right here is an important and often overlooked step, as it gives you instant and objective feedback on what you may be doing wrong and what you're doing extremely well. And by the way, the puzzle does not even stop there. There are going to be asset classes for you to gain further insights into. There is a futures, there's a Forex, there's a stocks course, there's a business plan that you want to write. There are milestones you want to achieve to scale up your business. And there's the mental game that you want to stay on top of course, all the time. To all these topics, you will find courses online within the classroom pillar of the Online Trading Campus. Now, this is an interesting slide. We trade many markets and we trade various assets, and we know that not all of them are the same. There's a big fundamental difference in the markets that we trade. And I believe that the difference comes with the major participants of these markets. These large participants, let's call them institutional participants, are the participants that we want to align our trades with. We want to buy when they're buying, and we want to sell when they're selling. Therefore, it does make sense to understand who those big guys are and how and when they generally operate in these markets that we trade. Right, so what we want to understand, or what we have to understand, is the following. We can categorize all of our markets into finite versus infinite markets. And there will even be a third category that we call man-made commodities. Now, let me explain this in a lot of detail. Finite markets are the easiest to explain. Finite markets are commodities like sugar or wheat, and infinite markets are markets like stocks or equity indices. The lifespan of a commodity like sugar is extremely short. It goes from producers to users, and then it's all over. Sugar and cacao, for example, would be made into chocolate. Wheat would be made into flour. What else? Gold and silver, they're used for computer chips or nice jewelry. Crude oil, of course, or natural gas are made into energy. And so all of these commodities, they have one thing in common. They're finite. They go from producers to users, and then it's all over. Now, it makes sense that the key institutional participants for these commodities are exactly these people, the users and producers of commodities. These will be the guys that you will learn to pay very, very close attention to. We also call them commercials. Commercials usually, they buy weakness, they sell strength, because they do not speculate like you and I, right? We are speculators in the game. They're not speculators. They're trading millions of dollars of real product, and they're in this business to facilitate those business activities through the futures market. And then this is how they make money. And that is why I believe they are the most important group for us to follow when it comes to finite markets. They're, by the way, also the biggest, and they're the smartest player in the game. Their business of trading millions of dollars of real product relies on their ability to buy and sell that particular commodity at the most advantageous prices. Now, the assets that are included under this finite market category are energies like crude oil or natural gas, precious metals like gold and silver, palladium or platinum. We have grains like wheat and soybeans. We have livestock like live cattle or lean hogs, and the list goes on and on and on and on. What's important here is for you not to memorize the markets all one by one, but really to memorize why a market is part of the finite category. Because you could add rice, you could add orange juice, you could add lumber, right? And the list would go on, and I couldn't make as long of a list here. The influence of what drives these markets, it must be the true physical supply and demand, right? Because gold miners, they cannot just print more gold whenever they want, and the supply is limited, and there will always be demand. For stocks, on the other hand, moving to stocks, we can categorize them into infinite markets. Now let's think about stocks for a second. No one really has need for stocks. I don't need a share of IBM or Samsung. If a Samsung share even exists, I don't even know. And in fact, I've never owned one and I'm still doing fine. But what I need is, I need the finite markets. I need crude oil. I need gold. I need wheat. I need coffee beans, right? So what moves those infinite markets is different to what moves those finite markets. So the most consistent key driver for infinite markets, like stocks, is the anticipation of increased earnings, or in other words, PE ratios. And of course, interest rates is also a big one here that we will look at. And at the center of all of that, we'll find stories, we'll find news or whatever. And so what I mean by that is that stocks do not really rally or drop because of real physical demand and supply. A company can always print more shares and you can live your entire life without owning one, right? In fact, millions and millions of people do. What drives infinite markets are all sorts of different institutions, and they range from really big institutions to smaller institutions. And so a big institution would be a large bank like JP Morgan or Goldman Sachs, and smaller institutional participants would be individuals like Warren Buffett. Yes, Warren Buffett would be considered a smaller institution. And what these participants have in common, they take decisions not based on price, they take decisions based on value. They value stocks, and by valuing stocks, they find out whether a certain stock is cheap, undervalued, or expensive, overvalued. And so this concept of valuing stocks is very interesting, and it can be achieved on increased earnings, PE ratios. This is, for example, a key driver in stock picking that we look at when looking at long-term investing and wealth generation, part of the stocks course. And in trading, let's say trading stocks and equity indices, we look at cross-market valuations of interest rates to value our equity indices or our stocks for shorter term and medium term buying and selling opportunities. Assets that are included under the infinite market category are equity indices like the S&P 500, Nasdaq, Dow Jones, the Russell, or then individual stocks like Apple, Google, or Microsoft. And here the list goes on and on and on as well. So the influence of what drives these markets are, remember, interest rates and PE ratios. Now let's move to the last category, man-made commodities. This category is slightly more complex. Let's start with the assets that are included here under man-made commodities. Assets here are Forex markets like the euro or US dollar or the Aussie dollar. All of the Forex markets are included. US dollar would just be an example. The Aussie dollar would just be an example. You could have minors, you could have exotics there as well. And as well, what you have is treasuries, mostly US treasuries, like the 10-year treasury notes or the 30-year treasury bonds, for example. And what these markets have in common are the institutions that are most active in those markets. The institutions that are most active in those markets are central banks and fund managers. Now let's start to talk about fund managers a little bit. Fund managers are what we call non-commercials, and they act, in fact, very differently as opposed to users and producers. Fund managers make money in speculating, so they would follow large trends, and by by following large trends, they would, for example, buy very heavily into strong uptrending markets. And the more a market is uptrending, the more they will buy. And the further it's uptrending, the more they will buy, and vice versa. The more a market is downtrending, the more they will sell. And the further it's going down, the more they will sell. They will continue to sell and sell into these trends. And therefore, they're trend followers, right? They're speculating. So they kind of work opposite to the users and producers who would buy into falling prices and sell into rallying prices. Now, central banks, they're an interesting group because they're the one that are setting the interest rates. And they're also consistently interfering in the treasury markets, and sometimes they even interfere in the Forex markets directly. And you probably knew this, but central banks are the largest institutional participant. So when they act in the marketplace, we really want to pay attention. We really want to follow them. And here we even have a recent example that we will look into detail later on at a later module. And that's with the Japanese yen and with the Bank of Japan, who most recently bought a lot of their own currency, and they're still buying. And the result, if you look at the charts, is a massively bullish Japanese yen. So if the central banks are intervening, which they do mostly in the Forex markets and in the treasury markets, we really want to pay attention to what they're doing. So the influence of what drives these markets, there are fund managers, there are the so-called non-commercials, there are interest rates, and there are the central banks. So what we do next is we take a look at all the strategy pillars for each of the markets we trade. And as you can see, the strategy pillars are divided here into two fundamental pillars, one technical pillar, and one optimizer pillar. And within the rows, you will then find the sub-strategies we would apply for each of the markets we trade. So what you can see here is that the thing that all markets have in common, that's universal and objective, again, is supply and demand, right? The foundation of our strategy. And it's the foundation of our strategy because it's universal. It can be applied to analyzing Forex. It can be applied to analyzing Apple. It can also be applied the same way for analyzing a market like gold. It's also the same whether you want to analyze gold for shorter term income, daily trades, or whether you want to analyze stocks for longer term investing, wealth opportunities. It's the same analysis, it's the same steps, it's the same process. So that's why it's such a powerful strategy. You'll find it across all of our markets. It's the same steps that we follow here on this analysis. And that's also why we start with supply and demand. As we look at the fundamental analysis, there's going to be two rows here. One really looks at the fundamental underlying condition of the market. It's asking, are fundamentals bullish or bearish? And on the favorable condition here, we'll look at the Campos COT index for finite markets, right? Because the commercials here that we can look at, they're the users and producers. And by looking at that, we can most accurately predict major rallies and declines in those markets. But it works best for the finite markets. When it comes to infinite markets, we'll look at Campos valuation, which looks at cross-market conditions by valuing stocks against interest rates or valuing the equity indices like S&P against interest rates. Here, what we also do, because as we talk about stocks, we talk about long-term investing, we also look at the Campus Yearly Roadmap. The Campus Yearly Roadmap is part of the stocks course within the library. I will later on show the new campus members in the room a little bit more about where to find certain things, but just conceptually now, these are the tools, the sub-strategies that you'll use. For long-term investing, you'll take a look at the Campus Yearly Roadmap as well, because what you really want answered is, are you expecting a recession or not? And if you do, right, you're not going to be bullish, you're going to be bearish. If you're expecting a non-recession year, a bullish year, then of course you're going to be buying, right? And so what you're going to do in terms of long-term investing depends here on what you see on within the Campus Yearly Roadmap session. And then also the Campus Equity Index in terms of long-term investing. Here you'll look at PE ratios, forward PE ratios. And so so here you have everything covered from increased earnings, PE ratios, and interest rates, as well as other recession indicators that you'll find here. And then when it comes to our man-made commodities, we again can look at campus valuation, again, cross-market conditions by valuing a Forex market, for example, against a storehouse of value like the US dollar, which is the Forex storehouse of value because it's the reserve currency, or by valuing a Forex market against the ultimate storehouse of value, which is gold, right? Which has been gold forever, and or interest rates. We will also look at the Campus COT index, but here we'll look at the non-commercials, right? Because the non-commercials, they represent the fund managers, and we know that Forex is a trend following market. By the way, within the Forex market, you will see some of the biggest trends that exist in any market. And therefore, you know, the fund managers are the driving force behind those trends. And therefore, we'll pay very close attention here to the non-commercials and not the commercials. And whenever a central bank intervenes, like what the central bank of the Bank of Japan did a couple of months ago, we really have to pay attention, and we really want to figure out how to get into that market as early as possible. Once you have a favorable condition, right, whether you can define whether you're bullish or whether you're bearish, once you can answer the question of whether you can forecast a major rally or decline in the near future, then you don't really know when or at what price you want to buy or sell. The when is the favorable time. That's an important question to ask. And here you'll look at the Campus True Seasonality for all of these markets. With the exception of infinite markets, here you should also look at the Campus Yearly Roadmap again for stocks, because the Campus Yearly Roadmap can be very different or somewhat different to the Campus True Seasonality. And so these two are interchangeable, and we should look at both here, but ideally what overrules the other is Campus Yearly Roadmap would overrule Campus True Seasonality. And then, of course, you have answered what you want to do. You want to buy, for example. When do you want to buy? We're now almost in February. Let's say we want to buy in February based on our indicator, and then we time the market based on price by using supply and demand and identifying a low price with a high risk-reward proposition. And then the last pillar is also, again, the same for all of our markets. We could then take a different approach and see how we could further optimize that strategy in terms of taking that trade. What would the computer tell us in terms of all the data it can collect on how to potentially enter that trade? When to enter it, at what price to enter it, what should be the stop loss, how many days should I be holding that, and what's the expected profitability of a trade? All of these all of these answers that we would get from supply and demand, we could also get from the computer. And ideally, our work should somewhat align with what the computer tells us. But oftentimes, well, you'll find both scenarios. You'll find that the computer is oftentimes better than us, but sometimes we're better than the computer. So the best scenarios are when we can align them, and that's usually where we get the best trade setups. So lots of input so far. Again, my main goal here is to give you conceptual understanding of what really awaits you in this course within the following modules, and what kind of strategies are all part of the overall blueprint strategy, right? Because we have a blueprint strategy, and within that blueprint strategy, you find several sub-strategies. So it's my job that each step of the way, I define a specific process, and I also show you how that process then fits into the overall blueprint strategy. And so if you're, of course, if you're new, you may not be following on all of these things that I'm saying, but what I'm really aiming for is the conceptual understanding at the moment. So just conceptually understand what I'm talking about. If you do not, then potentially revisit this course one more time, this module. In the future modules, of course, what we will do, right, is we will go into depth of all of these pillars individually. So this is the second last slide. A big piece of solving this mysterious puzzle of trading, in my opinion, is first we have to ask the right questions. And secondly, we need to know what strategies to use to get each of those questions answered to the best of our capabilities and the data that we have access to. Now, in which order you ask those questions, that's less relevant. What is more relevant is that you have all of them answered for all the markets you trade. These questions are universal to the different markets that we trade, whether they're finite, whether they're infinite, or whether it's man-made commodities. The questions that we're asking here, like, can we forecast a major rally or decline? That's the same for each of the markets that we trade. However, how we answer that question and what tools we use, that then depends on filtering the markets that you trade and knowing and understanding the fundamental drivers that are relevant for each market. So if you ask, can we forecast a major rally or decline? You're asking about the fundamental condition of the market. Are we fundamentally bullish? Are we fundamentally bearish? Here we'll look at the Campos COT index, because we can look at the commercials, the users and producers. For our finite markets, we can look at the non-commercials here. They are the fund managers for our man-made commodities. And we can look at the retailers. They're a third participant in the market that I'll show you how they act in the market later on only. But we could use the retailers for all of these markets. Then we have the Campos valuation. And the Campos valuation works on cross-market conditions. So it will value certain markets based on interest rates. It will value certain markets based on gold and based on US dollar. Interest rate, gold, and dollar, they have one thing in common. They're all storehouses of value, right? With gold being the ultimate storehouse of value, for potentially the commodity market, with the US dollar being the ultimate storehouse of value for the Forex market. So when it comes to cross-market conditions, it also depends what valuation metrics we use depending on what markets we trade. So if we trade a finite market, we could even look at valuing a finite market like a commodity against the ultimate storehouse of gold. If we look at infinite markets, then we know that interest rates are a major driver for infinite markets, for stocks, right? Interest rate affect the prices of stocks. And so therefore, we look at interest rates and value our stocks based on interest rates to get undervalued and overvalued readings. And when we trade Forex, man-made commodities, we could look at the storehouse of value for Forex, which is the US dollar, the reserve currency of the world. And so again, depending on what markets you trade, understand the fundamental drivers of the markets you trade, and then how we apply that to the indicators that we use. We could also look at the Campos yearly roadmap for stocks if we're into long-term investing and long-term wealth, right? If we want to look to buy and hold certain positions for years, then we need to know if there's a recession inside. And if there is, you may not be bullish, right? You may be bearish and you will not buy and hold. And so you will only start buy and hold positions if you're bullish. And so we need to look at the Campos yearly roadmap for stocks here as well. Now, once we can answer the first question of whether we can forecast or predict a major rally or decline in the market, then the next step would be, well, when is it most likely for that rally to happen, right? To take place? I know that I'm bullish, but is there a period of the year where markets are most favorable to rally? And here we'll look at Campos True Seasonality. We'll look at Campos Seasonal Radar Screen. We can also look at the Campos Trade Optimizer here. And all of these three, we would look at them for all of our markets, regardless of asset. And then the Campos Yearly Roadmap would only be for stocks. So for our infinite markets would be an additional layer of seasonality, which is essentially answering when is the best time to buy and when is the best time to sell. So once we know what we want to do and when we want to do it, all that's left to do is to time that market in the best of our ability. And what we are asking here is, what is the best price to buy or sell at, right? We're looking at price now. We're identifying low prices. We're identifying high prices, expensive prices. And we're identifying, and we will identify with the help of supply and demand, where those major institutional participants may have acted before, where there are institutional footprints and what price levels they may perceive as cheap. And therefore, we also, in terms of price, want to align ourselves as best as possible with them. And as we use supply and demand, we do that to the best of our ability. So what is the best price to buy or sell? The beauty here is that, again, this question is universal to all the markets that we trade. So once we figured out the fundamental driver that affects each of those markets, and we figured out what tools to use, and we've got an answer to our question, then what's left to do is we just need to look at price, we need to define price, and we need to place our buys and sells in order to get in and get out of the markets most efficiently. What we could also use here is price action, right? We could also use the Campus Trade Optimizer here. We could use, again, the power of the machines we're sitting in front of to really tell us, okay, rather than you doing the work, the computer does the work and then tells us where to enter. And all of that is all that the strategy process is, right? You will not ask more questions and you will not use much more tools. Maybe there will be slightly more tools that you will use, but what you see here will cover most of what you will use day in and day out. So these are also somewhat bullet points, that all of those we will cover in detail throughout this course, right? And what this also is at the same time, it's kind of this slide, you can save this slide because this slide kind of works like a checklist, right? Because then you can say, go ahead and you analyze gold, and then you ask the questions for gold and you look at things that are relevant to gold. And behind all of these points, you put a bullish or a bearish, and you answer those questions. And then at the end, you have an objective trade on your hands. But we will circle back to those slides that we covered today every time it's relevant in the future to tell you, look, this is where we're at. Now we're talking about supply and demand, and supply and demand is best to tell us at which price to buy. And then when we talk about the seasonals, then we go back here and say, look, seasonals work best in terms of answering when we should be buying or selling, and so on and so forth. All right, so this is the last slide that I had planned for today. And this is also what I want to end this module with, which is your trading journey. So if you're new to the campus, then I would take this opportunity to personally welcome you to the campus family. And I want to thank you for choosing Online Trading Campus. If you're a campus veteran, welcome back. Nice to see you guys. But this slide here is probably not that important for you. So within this slide, I want to show you what awaits you within your trading journey. So this is where you're at the moment. You're starting the Blueprint Strategy course, and you may have started a Blueprint Strategy course that's a scripted course, part of the classroom already, or you may be starting from scratch with me live, or you may watch this at a later date as a recording. So for me, I want to cover a couple of care points here. Before you continue this course, it's important that you have the right setup, the right tools, and the right software in place for you to make the most out of this course. So what you'll really need before you continue any further modules is you need to have a TradeStation in place. Now, a TradeStation can be physical, it can be software, right? So we use TradeStation as a software, and it's tradestation.com. And what you need to do is, we have no affiliation with them, but our indicators and our optimization software is coded based on easy language, coded based on TradeStation only. So if you do not have TradeStation, you will not have access to our indicators. So if you want access to our indicators, you need TradeStation. That's a prerequisite. TradeStation is also the most powerful tool for charting and analyzing. And in fact, that's what we'll use it for mostly. I know some people, they use TradeStation also to place orders, which is something that we teach as well. But most of us, we only use TradeStation to do the analysis and to do the charting, as it's the most powerful platform out there currently still that I know of. And as we do the analysis later on, we'll put that analysis into a trade that we place, and how we then place that trade on another broker is then something that I will explain later on throughout this course. So that means that TradeStation is a prerequisite, but only for analyzing markets. You don't need to put money on there. And then you can still continue to use your existing brokers that you may already have a setup with, and you can use that to continue placing your trades with. And I'll show you later throughout this course how that can be achieved. In fact, that's also what we do. If you want access to the indicators, then send us an email at info@onlinetradingcampus.com. Again, info@onlinetradingcampus.com. If you want to subscribe, then you can send us an email. In terms of TradeStation, physical TradeStation, I would always recommend to have 2 screens, at least one large screen, minimum 27-inch. Trust me, it will make your life a lot easier. In the beginning, I always say start with what you have and upgrade as you achieve certain milestones. But if you can make it happen, then it will make your life, in terms of visualization, we look at a lot of things at once, a lot easier if you have at least a 27-inch screen and a relatively modern laptop that could be your second screen. But no worries. If you don't have access to that, start with what you have and upgrade as you move along. Now, if you continue the blueprint strategy, you're learning or you're acquiring the foundation of trading. If you have one-to-one mentoring as well, then I would suggest you schedule your one-to-one mentoring sessions within the mentoring pillar of Online Trading Campus as per the following. You would request and schedule sessions only after each module has been completed. So after location, after direction, after zoning. And this way you can be the most efficient about the mentoring sessions you schedule with your mentor. How you do that is on your profile, you have a mentoring pillar. You can click here and you can go to view more mentors. And here you'll get a list of all the mentors that we have. So for example, you could request a mentoring session with Clemens and put in place, hi Clemens, please, could I request a session on module 1, strategy 101, which would be completed after today. You would send this request. He will now receive this request. He will have a 1 that's popping up here. He will send you back potential timings. And then as you agree to the timings within this here, then the session would automatically pop up within your calendar right here. And you would have the sessions pop up right here in your calendar where you could then click on it. For example, I had a mentoring meeting on Monday. You could click on it and then you could just go into that meeting when it's happening, right? When there's time for it. So that generally is how I would suggest you structure your one-to-one sessions. If you don't have one-to-one sessions, because what one-to-one sessions are really good for are to put the theories into practice, right? And to have someone by the hand, take you by the hand and make sure you're putting the theory into practice the right way. However, if you don't have a mentor, and or if you have a mentor, you have access to this live trading classes. And live trading classes is really where you will learn to put the theories into practice. What we have here is we have grid prep sessions. Those are recorded sessions mostly, but sometimes they're also live. You have funded trader live sessions as well. And there's many more that you may find occasionally within the calendar of your online trading campus portal. So again, tomorrow, for example, you have a funded trader signals with Clemens, right? And then you also have a grid prep session with Toby Forex. And then on Friday, you also have a grid prep Forex session with Toby. And so you can see every other day, if not every day, you can join some of us live. And that's where you have the ability to ask questions, right? You can compare the setups you have looked at, the questions you have answered with how our traders do it, right? Our mentors do it. And you can copy trades, right? Before you're a well-seasoned trader, only copy trades with very little risk or a demo account, and only scale up your business, only risk more once you're a well-seasoned trader. I think that goes without saying. Now, live trading classes, of course, what they're here for is for you to put the theories into practice and for you to follow our trades. And what you will do is at some point, you will follow all of us. You'll follow Clemens, you'll follow Toby, you'll follow Bernd, you'll follow myself. And eventually you'll find your favorite trader and you'll start to follow your favorite traders only, and you get to copy their trades and you get to ask questions, and that's quite an enjoyable experience. While you're doing that, what you're also doing kind of simultaneously at the same time is you are becoming an all asset mastery, or you are becoming an all asset master by watching All Asset Mastery. So we have different courses on the different assets that we trade for you to get further insights into the assets that you want to trade, right? What are the benefits of trading stocks? What do I need to know additional to the Blueprint Strategy course in terms of stocks? Like, for example, what the yearly roadmap is based on. And then when it comes to futures, what are some of the futures characteristics I need to be aware of when trading futures, like rollover, like expiry? And what are some of the specifics for futures? What works really well? What doesn't work really well? What are the advantages? What are the disadvantages of trading Forex, for example, which then you'll find in the Forex course. And then there's also an indicators course, which if you are right here at the beginning and you're like, oh, you're offering indicators, what are they exactly? You can go into the OTC indicators course within the classroom to get an insight of what our indicators are. To give you a little bit of a glimpse here, that's our classroom. And so the blueprint you will find right here within the classroom. Then you have a futures course, you have a Forex course, and you have a stocks course. And that's the indicators course. On top of that, you'll find a price action course. That's one of the last courses that you should watch, or you should just look at price action every now and again to start also get a better understanding of price action. And then down here, you have Mastering the Mental Game and the Pro Investor Business Plan. These are courses on top that the business plan is probably one of the last steps of your trading journey, because here you really need to already have a comprehensive understanding of everything. You need to understand the blueprint strategy. You need to understand supply and demand as well as the indicators. You need to understand the different characteristics of all assets. You should have a good sample size of trades and trading experience to put down some rules that are also potentially specific to your set of rules. So what you'll do within the business plan is you write down what are your set of rules, what are your set of risk settings, what are the milestones that you plan to achieve, and by achieving those milestones, what's your plan of scaling up your business in terms of slowly risking more and more once you are more well seasoned, once you're more of a rounded trader, and once you're more of a consistent and profitable trader, you'll slowly, based on measurable objective KPIs, start to scale up your business. And in fact, you may have a finish line here, but when it comes to trading, there's not really a finish line, right? Because you can always continue to scale up, you can always continue to risk more. But the finish line, in my opinion, in terms of learning, even though you always evolve as a trader, right? And I've been following the markets for 10 years, every day, every week, every month, every year. And I can tell you that even after 10 years, you'll still evolve at times as a trader, right? And it has to be that way. And so the best traders that I know of, they have one thing in common: time spent in the market. The more time they spend in the market, the better they are eventually, if they follow the right set of rules and the right guidance. And the finish line here visually would be once you're able to scale up your business, right? Once you've proven yourself that with a good sample size of trades, let's say 20 trades, you're consistently profitable. That means that with little risk, you can put the theories into practice, and you can transfer this external confidence, what the live tradings are supposed to convey to you, external confidence. Hey, this stuff really works, right? The trade that Jan took, or the trade that Toby takes on these Forex trades, they really work out. They play out nicely, right? Not every time, of course, but consistently they play out with good risk to reward propositions. So you see that over and over again. That gives you external confidence. But then to transfer that external confidence into internal confidence, you need to start logging your trades. You need to have a good sample size of trades, and then based on those objective KPIs, will tell you, hey, are you profitable or are you not profitable? Are you consistent? Are you not consistent? And once you've reached that phase of consistency, then it becomes more so a mental game rather than a technical game, right? Because then it's more so managing the emotions as you risk more and more money. And so that is the Pro Investor Business Plan right here. And that is mastering the mental game. Further, what you'll find on your dashboard here is you'll find a newsfeed, and the newsfeed is just like a newsfeed that you'll find on LinkedIn, or a newsfeed that you'll find on any other social media platform. And in fact, we have a social trading platform, right? And so we should keep this trading related. However, what you can do is you can share whatever you have on your mind, whatever trades you may be looking at, seeking for feedback. You can upload images, videos. You can comment on other people's posts. You can get notifications. In fact, you can edit your profile, and that's where you can say, I want to see posts from all or none, right? If you don't want to get notifications, then you can go to notification settings and say, do you want email notifications? Yes. Do you want browser push notifications? Yes. And very soon, do you want application notifications? Yes or no? And then here's where you can change it. Here's where you can write a little bit about yourself. And here's also where you have to ensure that the time zone is the right time zone where you're in right now, right? If you're in Dubai, make sure that here is Dubai is put. If you're in Germany, then make sure that here you have Germany put, because that time will be automatically transferred into your calendars. And while I may be seeing 7 p.m. Dubai time here, what you are seeing, if you're sitting in Germany, then you're seeing, I believe, 4 p.m. It should be German time, because it's 3-hour difference in terms of time, right? And so always make sure if you travel that also to change that appropriately. Here you also have the grid, right? The grid is part of copying trades, is part of following traders and what they do day in and day out. This is updated almost every day, especially on the Forex front. It's very quick. It's updated every day. And so you can see Toby, for example, here with his grid where he's posting his trade opportunities and how to read this grid and everything. That's something that we'll go into detail later on, but here is where you will find that, and also with a link that will take you straight to a video right here where Toby goes live. So that's the grid, that's the classroom, that's mentoring we covered. And then in terms of connections is where you'll find people that may be living close to you, and you can connect to that with them as well, and you can send them messages to here and connect with them. One last thing to mention on the newsfeed is that you have a quick calendar here that you can use to join those meetings or to watch the recording if you're late, and if you want to follow a certain post, right? So for example, you want to follow this post, then, well, this is my post. If I, for example, want to follow Bernd's post, because I can't follow my own posts, I automatically follow my own posts. If I want to follow Bernd's posts, then I ring the bell. Now it's red. That means that for everything that happens within the comment section, I will get a push notifications. If I don't ring the bell, then I also don't get spammed, let's call it, by push notifications. Only I get spammed if I choose to get spammed, right? And so that's very important for us, because as the community is growing, you may not want to be part of all communication. If you want to be part of all communication, then on each and every one that is interesting to you, you just ring the bell. And mostly my post. So here, for example, on Clemens' post, I could ring the bell, and now, wow, what crazy conversations are going on down here, right? And I could be part of this conversation that's happening here, and I would get push notifications on that. Likewise, the same is true for the blueprint for the classroom material. So for example, I have module discussions. I will have different lesson discussions as well. So that's the old course here. And I could, again, ring the bell on that specific lesson if I have a question. If you have a question, then please make sure that you're tagging me, right? You're tagging me. I cannot tag myself, but make sure that you're tagging me, because that is so that I get a notification. Or you're tagging Bernd, or you're tagging Bernd, for example, or you're tagging Clemens if you have a question to Clemens, or you're tagging Tobias if you have a question to Tobias, or you're tagging Christian Dietenberger if you have a question to him, right? Or you're tagging Nader still in the room if you have a question to him, right? And so regardless of who you want to put this message to, you can tag them, and then they get a notification, and then ring the bell so that you can stay on top of the question that you had, because as you go to the notifications section up here, it's automated notifications. Here you'll see a new comment on my post from Clemens, right? And then as you click on that, it will take you straight to that specific post where that conversation takes place. And so there's no searching, there's no navigating. It's just, okay, go to my notifications, and then from there, see what's happening, if someone responded, and then it will take you straight to the post. There's one last thing, which is trade review. And what you can choose to do is send in your trades to us, right? So that only we can see it. And you would just go through all the steps mentioned here, and you would add a trade review, and it's pretty self-explanatory. So you can choose to do that. Send us a trade that either worked or didn't work, that you want to discuss and you want to have some feedback on, and then we're more than happy to give you some feedback on that specific trade that you took, And in general, no questions are left unanswered. We try to do our best to help you to the best of our abilities at all times, right? And this is one very interesting tool that you can use to send in your trades, maybe a trade that is not even yet triggered, right? A trade setup that you want to have some feedback on. Mostly what happens is mostly people will trade their share their trade ideas here, and then they'll get feedback from everyone, not just from us. And that's of course also what you can do. The newsfeed is really for you guys to do whatever you want with it, as long as it's trading related. All right, everyone. So that covers module 1. The next module next week is Trading 101. And here we will start with the foundation of the blueprint strategy, which is the concept of supply and demand. Now, usually what I'll have towards the end of the sessions are also Q&As. If you don't have Q&As, then you can leave at this point. Thanks for watching. Happy and safe trading, and I'll catch you all next week again and within my live trading sessions.